Okay, so for today's video, I'm going to be going over open high low close and open low high close. This is exactly how I trade it every single day. I use this to get a good daily bias and to get into my trades with high conviction. So I'm just going to explain in what this is right here. May look a bit confusing at the start. So yeah, it's going to be like every other video. I'm going to draw this out, explain what this all means, and then I'm going to be showing how it works in the actual market. So right here, these lines, these are going to be higher time frame resting liquidity. So I'm just going to mark that up. Okay, there we go. So we've got a higher time frame resting liquidity here. So essentially what I'm looking for our bullish trade, I'll be looking for a zone of accumulation, then a manipulation, a distribution higher to take out our higher time frame liquidity, and then the market can do whatever it wants. In this instant, it just went back to consolidation. Now, this is exactly how I trade it. So this is going to be the 4-hour open right here. So the 4-hour candle has opened here. This is going to be the 4-hour close. This is going to be the 4-hour low, and this is going to be the 4-hour high up here. Okay, so now we've got this all marked out. As you can see, this is the open. So this is the main part. This body right here is the open. Notice how once price has opened, we've traded into an inefficiency, taken out this higher time frame liquidity, and that has given us momentum to put in a top wick and close. So what we've got here, this zone of manipulation right here, is going to be your wick. So you're looking for, if you're looking for a bullish trade, you're going to be wanting the new 4-hour candle to put in a manipulation to put in the low, and then you're going to essentially be looking to trade higher through the body to put in a top wick, and this will be your target for a bullish trade. So as you can see, we've got our manipulation in the wick down here, and then our distribution higher to take out the higher time frame liquidity. Now once we've taken out this liquidity, prices come back lower and closed, consolidating. So this is essentially how I trade it on the 4-hour time frame. So I'm looking for this sort of structure to create on the higher time frame, and then this will be your lower time frame structure. So I'm going to be finding a couple examples to show you how to use this. I'm going to find a couple bearish ones, a couple bullish ones, and I'm going to be showing them on different pairs. Okay, so I'm just going to show you the indicator that I use just to simplify this for myself. It's called the higher time frame power of 3 by 2 degrees. You'll see it right here, 2 degrees. So once you've got this on your page, I double click this personally, and I put this down to the 4-hour time frame. This is just where I find it works the best. Right here you can edit the colors to match your candles. So my current bearish candles are red, so I'm going to be having that body as red. The wicks are all black. The bodies and the wicks are all black, so I'm going to mark that up there. And my bullish candles are green. Now what this tells you is essentially where the new 4-hour candle is opening, where it's currently closing, the high that is put in and the low that is put in. So first thing you can notice right here, this is what I'm talking about. This is the manipulation higher for our bearish example. So we've got our manipulation higher. So you're looking for a manipulation to put in a top wick to then trade through the body to create a low. Higher time, the fuck off. And this is how I trade the open low high close, open high low close. So right here I have marked out the open and the close of this 4-hour market structure. So the first thing that I noticed is how we have opened here, we've created our low, we've created our high, and then we've closed right here. So exactly what I drew out just a couple moments ago has happened right here. Notice how we've had our manipulation lower to sweep out our form of liquidity down here, and that has given us momentum to move higher, create the high of the range to sweep out another form of liquidity. It may have been this higher fair value gap right here, and that gave us the reaction to send us lower for the close. So this right here is your 4-hour candle right there. It closed right here, opened right here, low was created here. So notice how this is exactly what I drew out. Here's our open. I'm just going to mark this all up. Okay, so here's everything marked out. Here's our open of the new 4-hour candle. Here is our low marked out here. Here is our high, meeting an inefficiency, sending price lower for our close. So essentially, this is exactly how I trade this. I look for, as soon as the new 4-hour candle opens, I personally trade this at 10 AM. I look for our manipulation lower to sweep out liquidity or tap into a fair value gap. Even better if we do both. And then after seeing that, I'll try catch a trade, taking us to the upside to meet our higher time frame form of buy side liquidity. And then after that, the 4-hour candle can just close wherever it wants. So what I'd be trading this in the manipulation leg. I'd be looking for potentially an inversion inside this fair value gap after manipulating through structure to take out a low or to take out a fair value gap. Let's just say there was a fair value gap here as well. How much better would that look? So we've swept out a low, tapped into a fair value gap. That's given us confirmation for longs. Another confirmation for longs is the new 4-hour candle has opened lower. Now I'm looking for this 4-hour candle to flip bullish. So I'm looking for a high to get put in. Now you found your inversion inside after taking this out. So we get our inversion here, and then we come higher, meet our liquidity, and then pull back lower. So now I'm going to be finding a bearish version of this. Okay, so right here I have marked out the open, the 10 AM open, the 2 AM close, right here. Now what happens in between the 2 AM open and the 10 AM open and the 2 PM close? Here's our body in between these two. I can mark this up right away. That's going to be our body. Now where's our lows and highs? Here's our high of the range. Here's our low of the range. Now what does price do as soon as we open? We have our manipulation higher to take out the liquidity right here. And then we have our move lower and our close right here. So this is the exact way I trade it. I've just shown this a bullish example and now a bearish example. So here is your body. Here's your high. And here's your low down here. Notice the sweep of liquidity. This is just perfect structure. Then we get our impulsive move lower for our close. So yet again, we're trading inside this manipulation leg. This is on a 15-minute time frame. So I'm going to be looking on a lower time frame after the manipulation got put in. I'm going to be looking for a trade around this area, potentially an inversion to take price lower to meet our next form of liquidity, which could have been these lows down here, could have been targeting these. So here's your bearish example. This candle would be red. We had a bearish close on this example. Open, high, low, close. Okay, so now I'm going to be showing you this on a different time frame. Look what we have right here. This is the daily time frame on NQ. Here's our new monthly open. The monthly has opened right here, creating the open of the candle. Then we have a slight move higher and a move lower, creating the low of this body. Now we've come higher and we're closing inside the range, creating our open, low, high, and our close. Now essentially, if you look what price has done right here, it has filled an imbalance right here, and it has also swept out these lows, which has given it momentum to move higher, to take out other draws of liquidity like this high right here. So this may look a little bit complicated, but this is actually very simple. If you're looking for a bullish trade, I use open, high, low, close as a confirmation for my trade. So if I'm looking for a bullish trade, I'm looking for a low to get put in, and inside that low I'm looking for a manipulation to take out an inefficiency or a form of liquidity. Now once we take out the form of liquidity, we have 3 confirmations to take your trade. We have our open low, we have our manipulation to take out liquidity, and our fill of an imbalance. So that is 3 confirmations for taking a long. So now I'm even more confident on taking longs, and I can, without a doubt, say that the body of this candle is going to come higher and take out my next form of liquidity. Okay, so right here on XRP, this is the daily time frame. Notice how we've got our open here of the new, this is the weekly candle. No, this is the monthly candle, and this is the daily chart. So we've had our open, low, sweeping out these lows here. So here's our manipulation lower, our high, and it looks like we're closing inside the range now. So notice how in every higher time frame wick there tends to be a lower time frame manipulation to take out some sort of liquidity. That is the perfect place to find your entries. So if this was, for instance, on a lower time frame, we've had our sweeps. Here's our sweep here. Now if we closed like this, what would I be looking for the next candle? So now we've had our open low, our high, and our close. We have left behind a fair value gap, a bearish fair value gap, and we have this form of liquidity down here. So what would I be looking for if we close here? I'd be looking for price to open, create a high, tapping into this imbalance, creating a low to take out this, and then it can close anywhere, it doesn't matter. I'd be trading this leg right here. After the manipulation, I'd be looking for my trade on the lower time frame, come lower to take out this form of liquidity, and then it can close. Okay, so now I'm looking on forex, on JPY to the US dollar, and what have we got here? We have our open, price creates our high. This is the 5-minute time frame, this is the 4-hour candle. We have our open high, and we swept all these highs up here. So these have all been swept out. I'm sure there's a higher time frame fair value gap in here. Okay, so looking on the 15-minute, what has price tapped into? I know it's a small imbalance, but it's still a fair value gap in the market. Price has tapped into this fair value gap, so we've hunted both liquidity and a fair value gap now. So now after getting our manipulation higher, tap into the fair value gap, what are we looking for? We're looking for a confirmation to take shorts to the downside to target another form of liquidity, which right here would have been this low. Look how we've taken that out perfectly. And now price is coming back inside the range to close. Okay, so now I'm going to be going through an example of how I use this to catch a trade on NVIDIA. So right here, as you can see, the new 4-hour candle opened. We put in our high. What did we do when putting in our high? We swept this buy side liquidity up here. Now I was looking for a fair value gap to get made. What did we make right here? A 5-minute fair value gap. So I was looking for price to tap back into this fair value gap. Once we did that, entered shorts, stop loss above the high where we've put in the manipulation. So now you can class this high as a protected high. What did we do when tapping into this? Price came lower, taking out what? Our news low right here. So that right there, perfect A+ trade. And that is exactly how you trade using open, low, high, close. So I'm just going to be going over the terms and abbreviations correlated to today's video, just in case anybody's getting confused. So your open, high, low, close right here, and your open, low, high, close is right here. Now I'll give one more example of what you're looking for when trading this. Okay, so for one last time, this is your open, low, high, close. This is the structure that you're looking for. This is the lower time frame, this bit right here, and this is the higher time frame candle in between both. So right here is your higher time frame resting liquidity, and right here is your higher time frame resting liquidity. So now you can see the 4-hour candle has opened. This is the open right here. This is the close. This is the high, and this is the low. So when you're looking for a bullish trade and you're trading open, low, high, close, you're looking for the low to get put in to then trade higher to take out your next form of liquidity. Okay, so this is the bearish version. So this is your open high, your low, and your close. So you're looking for your manipulation leg being the high and your close being the low to take out your lower form of liquidity, your lower zone of liquidity down here. Now I know that I've just marked up liquidity here. What I would essentially be looking for is a higher time frame fair value gap resting here as well. So if we can take out liquidity and tap into a fair value gap whilst putting in the high, then there's a much higher probability that a low is going to get put in and you can trade through the low. Okay, so right here I've got everything marked out. This is going to be the last portion of the video. I hope this video has helped. So essentially what you're going to be looking for is your open, high, low, close is for a bearish trade. Open, high, low, and then close. And then for your bullish trade, you're looking for a low to get put in for your high, and then your close. Okay, so you can screenshot this if you want. I'll just move this out of the way so you can do that. So you can screenshot this if you are having trouble understanding it or memorizing it. So your notes for today's video, I'd advise noting down, if you're looking for a bearish trade, try find the manipulation higher for your lower trade if you're trading through this manipulation, and if you're looking for a bullish trade, try wait for your move lower before your move higher. And that is basically, that's the basics of trading using these concepts. I feel that this works extremely well. I've used this for quite a while now, almost going on 2 years. I've used this concept and it's helped me out in a lot of trades. I don't use it every single time. I only use it when we're trading around 10 AM. So I'm looking for the next 4-hour candle to do this. I don't really trade this at the midpoint of the previous 4-hour candle. I'm waiting for the new 4-hour candle to do this. So yeah. So that's going to be all for today's video on open high low close and open low high close. I hope this helped you guys understand this. It does look like quite an extreme concept to learn. However, once you really dial it in your head, it's very simple. Just a quick reminder on the indicator that I use. It's HTF power of 3, standing for higher time frame power of 3. The power of 3 is your accumulation, manipulation, distribution, which I will be doing another video on, but essentially I'll just mark them out right now. Here's your accumulation, here's your manipulation, and then your distribution higher. So that is exactly what AMD is. I will be doing a more in-depth video on that soon, but for now, that's going to be everything for today's video.